Hi everyone, good morning. I hope you guys are all set to enjoy your Saturday and Sunday. On our series on price action, I thought we'll make a quick video and talk about uh, two types of reversal patterns on the next series, which we wanted to continue and talk as much as possible. So today we are going to talk about two of these reversal patterns as we go deeper into the subject of reversal patterns. So two of these patterns are very similar, but they just appear at a different place. One is known as the hammer, the other one is known as the hanging man. The real bodies are near the top of the daily range. The variety of candlestick lines are fascinating. Either the line can be bullish or bearish depending on where they appear in a trend. So, if either of these lines emerge during a downtrend, it is a signal that the downtrend should end, and in such a scenario, the line is labeled or the line is called as hammer. And in a that is also a term which they use to call as market is hammering out. And then the Japanese word for this was something like takuri or something like that, if I'm not wrong, reading from Steve's book. This word means to something of an effect of trying to gauge the depth of the water by feeling for its bottom, something like that, which creates the hammer kind of a pattern. All right, so the only difference is that when the prices are moving up and the stock kind of creates a inverted hammer, or it is known as a hanging man, right? Like it's moving up right over here and it creates a hammer kind of a pattern like this. It kind of becomes a evident thing, that so that I can easily use a pointer like this. Okay, so this obviously becomes a point of concern which you can easily refer right over here. So what happens in this kind of a situation is that it is known as a top reversal pattern and it is called as hanging man. The name hanging man itself is derived from the fact that it looks like a hanging man with dangling legs. All right. So one of the very interesting things here is that both of them are some type of candlesticks which look very similar, the way they look, but they mean completely different in terms of their action, what happens. So hammer and hanging man can be recognized by three criterias as per Steve on the book what he has written. These are very important factors, otherwise we might identify them completely incorrectly. The real body is the upper end of the trading range. The color of the real body is not important. The long lower shadow should be twice the height of the real body. It should have no or a very short upper shadow. So what he says is that in a given situation, he says whatever you have picked up as a situation for hanging man, first thing you need to know is the trend is there. Second thing you should also very clearly understand is the size of the body, and the size of this particular lower shadow should be twice the size of the body. And the third thing is that there should be almost no or very little upper shadow. Okay, upper shadow or upper wick. So there should not be any tail. It should not be having a big wick like this one, right? It should not have a big wick like this one. Okay, wick or tail or a shadow, it is okay as far as it is small. So it's very important that one understands these factors very clearly. So let me reiterate, real body is at the upper end of the trading range, that is the trend is upwards. and the color of the real body is not important. So whether it's a red or a green candle, it does not matter. The longer shadow should be twice the height of the real body, and it should have no or a very short upper shadow. So it should have very short upper shadow, okay, and also it should, the tail or the lower shadow should be twice the size of the body of the candle. Okay, so when I say body of the candle, this is the body of the candle, this. So this wick should be twice the size of the body of the candle. So that is what it is all about. So it's very important for one to understand this very clearly. So the longer the lower shadow, the shorter the upper shadow, the smaller the real body, the more meaningful the bullish hammer or a bearish hanging man is. So what he further goes to say is that the real body, whether it is hammer or hanging man, can be green or red. In his book, he would have probably referred to white or black because of the printing issues during that name. They had no color printers. It is only that the green color or a red color will slightly imply whether how much it's going to be bullish or bearish in its nature. But from a psychology perspective, that point becomes very important for one to understand. There are a lot of other key things, he continues to explain, that is also a point of very strong significance for one to understand on these factors. Okay, if the market opens lower the next day, those who bought on the open or close of the hanging man day are now left hanging with a losing position. Thus, the general principle of hanging man, the greater the gap down between the real body of the hanging man day and the open in the next day, the more likely the hanging man will be a top. Another bearish verification could be a red body session with a lower close than the hanging man session close. So when you see this kind of a hanging man coming into play, the next day, if it is opening below or if it opens and closes below the close of the hanging man, it gives you additional confirmation that the trend is probably going to change downwards. So it's very important that you don't take a decision just by looking at a single candlestick pattern. You wait for the next day, ideally a gap down opening and a further move down and close below the previous close kind of confirms the that the top is a hanging man and it is probably not gonna make a new top. Okay, that's the confirmation which is required for a hanging man. Otherwise, it might not be a true hanging man kind of a situation, and it might be something which might change over a period of time. Okay, so you can see that this has become the top because you can see this is again a hanging man pattern, and obviously the price is continuing to move up in this situation. So we can see the pattern here, and next day there is a huge gap down opening which has happened, moved back up, but the top is not broken. And then once you get a confirmation and the price starts moving below the close of the hanging man, you can be sure that the price is going to retrace, and there are situations where it might retrace more. Let me switch to weekly chart as well, because these time frames could be different. Okay, so we can see some pin bars which have got created. I just want to see if I can see a strong pin bar. There you go. Okay, very strong pin bar, and you can see how much it is pulled. The next day also opened, moved up, though it's hit a small rejection and come down, but you can see that that particular level is not broken. And then there is a strong up move which has carried the stock completely upside. Okay, and you can see how the upward movement has happened right from this particular range. Okay, and the movement has happened all the way till here, so which is a significant movement. So what one needs to understand is that when you identify these pin bars on certain type of chart, whether they are weekly or daily, they give you significant movements. And we can see even the smallest of the pin bars which has got created on the weekly has pushed the stock upward. Okay, so it's very important for you to understand how and where the pin bar is created and how much is the close movement from a movement perspective post that pin bar. So it really does not matter whether it's a green pin bar which we are seeing or whether it's a red pin bar which we are seeing. Those characteristics in terms of the wick or the shadow being double the size of the real body is very important, and how it moves up is very, very important. And what happens on the next set of days from a price perspective becomes equally important. As it closes above the previous close and then even the day after starts moving, it kind of gives you a confirmation. Okay, so all we need to see is that how it is moving and our probable stop loss being the bottom side of the hanging man or the lower side of the hanging man. Okay, so go ahead, look at the stocks and look at the candlesticks and try to kind of come up with your own theses and understanding in terms of where are those top trends, and where do you see a hanging man got created and where do you see a pin bar got created, whether you saw them on a weekly chart or whether you saw them on a daily chart. All right, so this is a very short video because I'm just going to talk about one of the reversal patterns from a single candlestick pattern. So we looked at something which is very similar from a look perspective. One appears on the downtrend, one appears on the uptrend. Okay, stay tuned for the next episode. We will continue to make as many videos as possible and cover all of these things. But what is most important than the videos is that now that you know the basic rules, go back, review the charts, and see how your understanding is, and see how many stocks you can identify as a pin bar or a hanging man. All right, take care.